Okay, you guys can hear me, right? So I think we are just three of us here. It doesn't matter, right? Okay, so thanks, Festy. You can hear me. So I'm going to be running this commentary quickly. I will be doing this 8:30 going forward. We'll be doing this 8:30 going forward. So Monday normally is for weekly profile. Monday is the time for mani no accumulation for the week based on weekly profile. So you can trade Monday, but if I were you, I would advise that mostly you just monitor price action for Monday to really give you the direction that you know for the week. So let's just get down to it. Right. Okay. So we're looking at GU. Like I said, I advise everybody on Telegram channel to stick, and on my on the my course I share the strategy to GU, and I always advise you now this is what you do to be able to gain consistency and be able to gain profitability. Stick to one. Please, can you just give me a second? Okay, guys, can you hear me? Oh, sorry for that break. I need to sort something out. Okay, so I always advise you, or before we go straight to the commentary to get our direction for the week, proposed direction for, we always advise you to focus on one pair, one session, one trade per day, right? If you do this, this will enshrine in you discipline, and it will help you to be able to study the strategy well. We get to get it, so you are not just going off just doing gambling with the strategy. Because if you focus on one pair, one session, one trade per day, and I can go further to tell you to also focus on for beginners, right? So I will just assume that we're all beginners here. Focus on 0.5% risk per trade. This is your route to profitability. Do this. This is very powerful. Do this. I'm not just telling you because I read it somewhere, but I'm telling you because this is what I do, right? I do one pair, one session, one trade per day. This is what got me to consistent profitability. When you gather experience, then by then you'll be able to better know how to manage your risk. Then you know how to manage your risk properly. Then you can now start adding other pairs. But for starters, stick to this. This is a golden rule. Stick to this, right? So let's go straight to the commentary, right? I remember we are looking at GU. First of all, I remember I told us from last week when we did our first commentary from last. I say when you come into the chart, you want to look at what price is doing to the right hand side and what price is doing to the left hand side. So if you look at if you look at our right hand, you don't want to go too far, but you just want to look at what price is doing, just get a general view, right? So if you look to the right hand side, you saw that price was price was bullish, right? Price was taking out highs, right? Price took out this major high, right? Took out this major high, telling us that we were in a break of market structure, a continuation break of market structure to the high side, right? Because this was the previous higher low that induced the break of this previous higher high, right? So that this range was taken out. It means that our dealing range on the weekly will be between here and here. And if you see, when price came down here, price didn't take out this range. So in the outlook of price is still looking bullish, from the left hand side, right? However, when we look to the right hand side, we see that price is beginning to show a little bit of bearishness. to this, right? Why do we say that? Because you see that this internal price action, all these things here are internal price action because it has not broken this previous range. So all this here are internal price action. You see, price was internal, price is bullish, external structure, price is bullish, internal structure. Price was taking out highs here, taking out highs until it took out that major higher high, right, to create a shift of market structure. So most likely this would have been a return to the origin of this move because those that trade demand and supply. So this would have been the demand that created that break of market structure. Which price? See, price came down into it, that other block. Price came to the other block and it respected going up. Price is going up. So now what we want to do, I always advise people, you want to just anticipate what price is doing. However, you also want to react to what price is doing because the market is no market just move. The market is driven by market makers and big institutions. So all we need to do is just to align ourselves to follow so we can get our trades and get our money out of the market. You don't want to hold on strictly to your bias and hold it like you are the one programming the market or you are the one that programmed the algo. You just want to anticipate, but also majorly you want to react to what price action is showing. So what you see price action show, that's what you react to. So we see going into this, we see that market also came down. See that internally, market now started giving us a break of market structure to the downside. So, like I said, our right side, we just look to the left to give us an idea. Our right side is what is more important. We are looking at what this up. So this was a break of market structure. Why would I say this is a break of market structure to the downside? Because what? We created two short-term levels, right? Created two short-term levels. This was a short-term level one, short-term low one, and this is short-term low two, right? So if this would have grabbed this and close to the upside, we'll consider this as inducement or liquidity run. But right, it broke it. Now, if you look at it, you see, although there's a little bit of rejections in the candlesticks that came down to break structure to the downside, but you can see that all are bearish candle. You cannot see any bullish candle in this move. That's also giving you an idea that the sellers or the algo is shifting to go to the downside. However, we're not going to take action till we see what price we'll see what price is doing, right? So looking at this, we see that we have a break of market structure to the downside here, right? That's what we have a break of market structure to the downside. So we are looking to the left side, our left side, we are looking bearish, right? Looking bearish, right? So now you see when we got the break of market structure, price returned back to this breaker block, return back to this breaker block here. If you want to know what breaker block is, it's all covered on the channel. So you can just go to the channel, God of Indices. Yeah. And so just look at the channel, God of Indices, go through the course. You'll see I covered that. I'm not going to talk about breaker blocks and all that. So it came to the breaker blocks and it pushed down and gave us a second break of structure to the downside. Now, what we also, based on the God of Indices strategy and the course on the YouTube channel, I said mostly the most recent lower high or higher lows are inducement, right? So most likely we're looking at this because price just came back to grab all the liquidity up here before early runners of this sell. So if price continues, if price goes into the equilibrium of this range. Now, this is the equilibrium of this range. Now, why do I say it's equilibrium of the range, right? Because this was the previous range, this higher low that led to this higher high. This was the previous range. Now, for the bullishness to have continued, this is the current range, internal range that shouldn't have been broken. It have continued to the upside, right? Overall range, the protected low is this point here. This point here is the protected low. This is our protected low. That price came down to retest off the other block of the origin or the demand zone. continue pushing up. So we have two most possible scenarios here. We are looking at GU. We are looking at price going to target this. Price going to target this as buy side liquidity. So this could as buy side liquidity. So this is well, most likely, this is our most likely first drawn liquidity where we are looking to price to go and target, right? This buy side liquidity residing above here, right? Now, buy side liquidity, that's the stop losses, they sell, they buy stops and all of them, they're residing here, which is money. Money is the driver of the market, right? So this is our first possible drawn liquidity. But now we want to, first of all, anticipate our weekly close, right? Our weekly close. We are not looking at this entire move can take more than a week to achieve here. It could take one candle. You can never tell. I don't know. Probably maybe CPI can engineer this. It can just take one big weekly candle to go to this side. It's a possibility. But me, I'll be looking at the most likely that's if CPI pushes this up. If CPI pushes this up, this can just create one weekly candle that will cause here, will come here. However, I will not be anticipating that because with what an NFP did last week, there was no movement with NFP. It was just a seek and destroy. It was whipsaw movement. However, if CPI decides to just give an aggressive move to the upside, CPI happening on Wednesday, there are two things involved, right? So this is one scenario. That's why I say we are anticipating, right? Then nothing is 100%. It's a game of probabilities. So second, we are looking. The second view I'll be looking at is this two range. Can you see this previous range? This the higher low that led to this higher high. We are looking. Price is also looking to come to the equilibrium of that range. The equilibrium of that range, which is around here. We can see this. All this is liquidity. And you see all these points are liquidity residing here. And there's also something that is there. There's also another confluence there. Also what we call a inversion, IFEG, inversion fair value gap. Now, can we see how the consequent encroachment, which is the midpoint of this fair value gap, aligns with the midpoint of that range, right? So the algo most times moves like this. So price also will want to come here and tank, right? To tell us that this break of market structure to the bearish side, this internal break of market structure will be valid to give us the external break of market structure, right? So this is another thing. We don't program the market, we only anticipate and we wait for reaction, right? And you see, this is the sell side liquidity residing here. This is sell side liquidity residing under here. This is another possibility of market, right? So this is sell side liquidity residing here. This money residing here. You can see this was grabbed, it gave us this retracement. This, so we have this initial low here and this one. Now, this means once this is taken out, it means that the protected low is taken out. That means that we have shifted that externally bearish. That means externally now we are bearish. But for now, we are only bearish internally on our weekly structure. Why? Because these are the protected low in this particular point here. Do we get that? If we get that, let me just see our chart. Let me just know that I'm not speaking to myself and you are following or still on the call, right? So that's that for that. Okay, so now this is another possibility we are looking for. We're looking for price to push into it. So now what I'll be looking for based on weekly profile, I'm only anticipating, I'll be anticipating between today, there are two things that can happen today. We can get a minor retracement back to this weekly order block, right, between Monday and Tuesday, or Monday and Tuesday. Tuesday we get the move to this side. So Wednesday, I could assume that maybe CPI on Wednesday will move up, do the manipulation to create the high of the week, and run us to this low, right? This is one anticipation. Second anticipation I'll be anticipating is for price, right? For price to move between Monday to Monday and Tuesday, for price to run here, right? and reject off this other block and create the low on Wednesday, then CPI will engineer the move up to this upside here, right? So that's our anticipation, right? But we know based on our candle theory in our course, right? Our candlestick anatomy. We want to see the manipulation. So we don't know the manipulation. Either the sell is the manipulation or the buy is the manipulation. We are just anticipating. But tomorrow will tell us, will give us clear direction of what price will want to do in the market, right? So we only just react off price. We just position ourselves to react. So these are the two possible views of the market, right? These are my two possible views of the market I'll be looking at to trade this week on GU, right? On GU. So if you can look, if you look at your DXY, you see that this also aligns. Or not want to look at DXY, you see that DXY also aligns to our two possible views, right? Our two, see on the weekly, can we see the same thing aligns, right? DXY is bullish on the weekly. If you look at it, right, it's bullish on the weekly. Now let's look at this. If we look at this, the same thing applies. There's a break of markets. Let's go to the right quickly. I don't like doing the XY because I trade GU, but I'm just for many people watching. You see, price took out. This was a break of market structure to the downside, right? If you look at dollar was heavily bullish. Dollar was heavily bullish because before market took out break of structure, taking out short-term level 1. You see, this is how I know you take it. This is a short-term level, took out short-term level 1, took out short-term level 2, took out short-term level 3. So I'll consider this a break of market structure, right? If you can go to on the YouTube channel and study why I'm considering this a break of market structure. This is just commentary. I'm not teaching you what I look at, right? So now we look at break of market structure now. So if this is a break of market structure, that means price has created, this is the low that led to this high. So it broke this high. So this is our protected high, right? You see, price has not validated it, telling us that we're continuing upside, bullish, right? So right now we see we are bearish on the dollar, but all this thing happening, everything happening within this range is internal structure. So if you see any bullishness happening within this range that's not taking out this high, it's internal structure playing out. Now, although we see that internal structure, when it broke structure, most likely we're getting a break of structure to the upside to come and fill in this zone, fill in the equilibrium of this zone, which you can see that perfect. Price did that. Price came back and fill in the equilibrium of this zone here, right? Can you see? Can you see the nice reaction of that? This is not just coincidental. This is precise, right? Because you see the first candle rejected off the equilibrium, second candle rejected, and price, the last tap to the place, price turned to the downside, right? So you can see this is like a displacement candle to come and take out internal structure, to break internal structure to the downside again. Most likely, this is telling us that most likely, you see, external structure was bearish. Now internal structure has turned bearish again. So there are two things I'll be looking for here. I'll be looking to get this range for DXY. Now I'll just do it for price to start back into this zone. Start back into this zone, right? Because this is most likely liquidity up here. Start back into this zone and crash for dollar to continue being weak. Yes, continue being weak. This one option. The second option is that our internal structure has broken structure to the upside to tell us that, okay, we want to go and target that high. We want to go and target this buy side liquidity to continue our bullish move. These are two options, right? These are two options, right? So you get these two options to your side and you trade when you see what the market react. Now you see here, this zone 2, this is the internal structure that took out this zone. That's what I mark, right? See, so price will be looking to stab into this this is a tap into this equilibrium, right? Or it can come lower deep, right? See, there's a fair value gap here. This is a fair value gap here that aligns also with like a breaker block here, right? And also institutional order flow entry drill. It aligns here. Then price stabs to the upside. So you can see this aligns with our view on GU. So this is what we are looking at coming into the week. What you are looking at coming into the week. So if you have your questions or any questions, just drop them at the chat. If you don't, then we can call this a day. Any questions? You can unmute your mic. I think if you want to prefer to talk, you can unmute your mic and ask your questions.
No, Mr. James, no question for now.
Okay. No questions, right?
Yeah, no question.
Okay. So, who's the other person on the call? Forex grandson. Any question? There are no questions. Let's call it a day. Okay. All clear. So guys, thank you. So please, let's pay attention. I know some people are at work and everything. So this is a commentary. This is the time I can give. My Sunday is already I have a very important meeting. It's already booked. That's why we can't do this on Sunday. Ideally, we should have done this on Sundays, so you just know what we are coming into Monday. But it's never too late. You see, based on my strategy, you see, you still can get this and still get your trade if you want to trade on Monday, but I advise not to trade Monday, right? So we are going to be doing this going forward 8:30 on the dot every Monday. Thank you guys so much. Have a wonderful rest of your week and stay blessed.